Hi, everybody. Welcome back to another edition of VCTV. I'm Kyle Ellicott, your host. And as I have mentioned before, this is an important time of the year. Why? It is that last sprint towards the last quarter and to the end of the year. This is the time as entrepreneurs, you are probably fundraising and you are probably looking at getting your product into market if you haven't already. This is an opportune time to understand what's happening in markets and who is investing what and how much and where. And so we've brought on some of the best and the brightest investors in the particular spaces we're going to be talking about in just a moment to share some of those thoughts and insights with you. As investors, as I mentioned, entrepreneurs are fundraising. That means you are probably looking for some of the great companies who are out there building and leading in their industry. This is important for you. Understanding what's happening and what's changing on a global scale, whether that's in different regions, that's at the country level, technology, or industry, we are going to unpack all of that today. And specifically, we're talking around finance, financial services, and banking. These are three key areas, and summarizing it all into finance. This is an area that has seen a dramatic digitization over the last year, year and a half, and will do so for the coming decade. We've seen 2020 and a little bit of 2019 really start to set the stage as to where things are going to go for us in the next 10 years. And there's a lot that's happening very, very quickly in different areas around the world. And we're going to talk all about that today. But before we do, audience, thank you so much for tuning in and joining us for another edition of VCTV. As investors, if you'd like to be on a show like today, do reach out to the LA Token team, Elena and or myself. We'd love to find the right fit for you. And entrepreneurs, not just a stage here for investors, it's also a stage for you. Do reach out. We'd love to have you to join us on the virtual stage to pitch us as investors live and also to our entire audience as well. And a big thank you to Elena and to the entire LA Token team for making VCTV possible every single day on multiple screens, on multiple devices around the world. And we're happy to have you join us. With that, I'm your host, Kyle Ellicott. Let's dive in because I love this topic. This is super exciting and there's so much to talk about. With that, Iris, welcome back to the show. Pleasure to have you. A little intro and a little background for the audience, please.
Thank you, Kyle. I'm Iris Chan, Senior Partner of Mighty Capital. FinTech has been one of our investment focus and thesis, so I look forward to more discussions. But one issue I may want to tee it off is that banking is the mother of all, including financial services and finance. So to me, fintech is like money moving in and moving out. One topic I like to see we focus on is the ESG issues for those people that have not enjoyed the democratizations of financial services. Thank you.
Thank you. And that's actually a great topic. We've had that come up a few times on this show, and I'll come back to you in a little bit as to what that means for the audience that may be tuning in for the first time. Lewis, welcome to the show, first time with Elena and I. If you can, a little introduction, a little background, please.
Well, I learned how to unmute on this. Well, I'm a managing partner with FJ Partners. We're a private equity firm. We focused on technology. Right now, with what has been going on, technology has been prevalent, especially in the financial industry. You have a lot of things moving, a lot of moving parts, and we look for special situations, special companies that are being disruptive in a space. And in the financial industry, as Iris mentioned, digital is key. Having mobility, having the ability to move money inexpensively, quickly is going to be important. So we're focused on that along with a lot of other things. I don't want to take up too much time, but that's pretty much it.
No, it's great. I mean, that's just the tip of the iceberg, right? I mean, moving money as individuals to moving money as companies to so much more. There's so much more to unpack there, and we're going to be back very quickly on that. Adrian, welcome back to the show. We just saw you a few days ago. It's a pleasure to have you again. Little intro, little background. My friend, you are on mute. So it's exciting to have you, but we want to be able to hear you too. There you go.
Thank you very much for having me here again. And we'll meet also on Friday. Hi, Kyle. Hi, everybody. Hi, Elena. Hi, LA Token team. Thank you very much for the invitation. My name is Adrian Niculescu. I'm today also in the studio because I planned to to arrive in my home office, but I wasn't able to leave this place. I'm involved in few projects. One of them is Faster Capital, which is a Dubai-based accelerator and incubator for companies. I'm also involved as a CMO EMEA for CloudCoin Consortium, and I like to announce at this background stage an exclusive news. Radatech, the company behind CloudCoin, which is a post-blockchain currency, will have the annual meeting, the online annual meeting on the 5th of September. And for the first time, and maybe for the last time, this meeting is also opening to the public. And Kyle has in his LinkedIn inbox the invitation to join this meeting. And he will probably, if it's kind enough, will share this as a resource. So everybody potentially interested in the next post-blockchain big thing could register to this event. I'm very happy to be here and excited to take part in this groundbreaking online meeting. Thank you very much.
Wonderful. And I will, to the audience, I will share that. And there's a few other links that have already been tossed around internally that I'll share with everyone afterwards as well. So do stay tuned. And Isabel, welcome to the show as well. First time with Elena and I. Little intro and a little background, please.
Thank you. Hi, everyone. My name is Isabel Friedheim. I am an investor and an entrepreneur. I am the co-founder of a company called Magnify, which is a fintech company based in between New York and Boulder. Magnify is a search engine for financial products like ETFs, mutual funds, and so on, that uses natural language to pull up products and has an investment platform associated with it. Magnify is now a little later stage, but I have also been over my career an investor in venture capital and fintech, only fintech. I've been with a few funds, the London Fund and Mission OG, and I now make investments in fintech for a family fund on an opportunistic basis. I got into this business because I worked in the financial industry originally. I worked in investment banking and private equity and saw opportunities. So that's to answer your question, Kyle. We have certainly seen a change in the last few months, changing revenue figures and changing opportunities that has caused us to slow down in making investments.
Which we are going to get to, because that is very, very important for those that are tuning in as to why that's happening specifically in these industries right now. And Peter,
Kyle,
I see you. There you are.
Yeah, it's been a while. First of all, I want to thank you and Elena, first of all, for putting this on. But more importantly, I met some great friends like Gary here offline. And I think it's just a great opportunity in this post-pandemic world to meet new friends and possibly new colleagues as well. So again, just a lot of thanks there. For those who don't know me, Peter Plout, I'm the executive director of Weimer Family Office. Weimer Family Office is part of four companies under the Weimer group of companies. One is Per Weimer's Family Office, where we manage his wealth and some close friends and family, ultra high net worth individuals, and other family offices. Weimer Financial, which is an investment bank with a focus on ultra high net worth individuals, families, and companies. Third is our Partner Family Office, which is a five-family, multi-billion-dollar family office. And then fourth is Weimer Space, where Per houses his extracurricular activities and philanthropic activities as being a founding astronaut with Richard Branson on Virgin Galactic as one thing. In the post-COVID world, as Kyle, as you know, I've been focused predominantly on real estate investments, but we also look at oil and gas, metals and mining, alternative energy, et cetera. We're very focused on ESG, as Iris mentioned, so we'll talk a little later about that. In the post-COVID world, I've probably signed engagements or term sheets somewhere in the magnitude of about $5.5 billion. So we're still full focus, full pedal to the metal. I would say this. This is a great opportunity to talk about fintech because the FASB initiated new rules at the beginning of this year, which causes banks to have to mark to market their loan exposure every quarter and reserve appropriately. That means every loan they take has a hit to EPS. So if you add that and the post-COVID crisis, loans by banks, the traditional source of intermediation, is going to be pulled back even further, leading to a huge opportunity for tech, fintech, et cetera. So look forward to today's panel.
Absolutely. We've seen so many people that are coming out and saying that they're now a fintech company when they were not even in the fintech space or financials in any way, shape, or form. But we're also starting to see more companies focus on that underlying technology, whether it's at the infrastructure or the hooks into various fintech companies as well. So Peter, you're teeing it up just perfectly. Gary, to you, last but not least, introduction, a little background for those who may not know
Thanks,
you.
Kyle. It's been a long time.
A few minutes.
Yeah, so my name's Gary Fowler, and I'm a serial entrepreneur. I've been doing startups for over 35 years, and I love artificial intelligence. I've done 15 companies. I was on the original management team of Click Software. It was sold for $1.35 billion last August. I actually named the company, came up with a family of products. I also am the co-founder of another near unicorn, Eva.ai, with a billionaire from Russia, David Yang. It's a Silicon Valley-based company that I co-founded 4.5 years ago. I started the top accelerator in Russia and the #1 corporate private accelerator. And the whole idea is we're really at startup 3.0. 1.0 is acceleration. 2.0 is really regional dominance, and 3.0 is going global, especially the way we are today in the digital transformation. So I love AI. I'm an investor too. We're building a $100 million fund in Atlanta. Right now, we had a $10 million fund in Russia with startups. Did a lot with female entrepreneurs. So, love being here. Thanks, Kyle. And I look forward to this incredible panel. Hi, Peter. It's good to see you again.
It's awesome to have each and every one of you. So just to get started real quick, I mean, what are you all seeing as the current state of financial technology? So we'll include banking, financial services, the like in that. And Iris, I want to start with you if we could. What are you seeing kind of as that current state of things as this industry has shifted and shaped over the past year?
Well, I think from the lens of an investor, we are actually still seeing a lot of fintech innovations, especially, I will say, with the advent of the acceleration of AI, we are seeing a lot more data management behind the scene to enable financial services to either deliver faster, more accurate, more predictive. So for that, to me, banking is no longer moving money. Instead, we're moving data or information. So that's the reason why I view fintech as a core industry that will provide democratizations. And most recently, last month, we have the first bank called Varo Money that received the OCC approval and then the national charter to be a real bank. So that is the first bank that received the approval. I will see that is a beginning trend that we're seeing this more happening. Bank is no longer banking anymore.
I think you're calling it out right. I mean, we also had the OCC also announced, on the other panels we've spoken around blockchain, also come out and talk about digital currencies and the custody ability of those for standard banks as well, and seeing where that's going to go with a lot of talk around CBDCs, so central bank digital currencies, and the digitization of dollars, euros, and the like, yuan, and various currencies around the world. So we'll hold on that, but you're spot on seeing that trend. Go ahead. Oh, did you have something to add, Iris?
Oh, one thing I will say that when it comes to financial products, you cannot avoid regulations. So I think with the technology, we actually erasing the border is no longer an issue in terms of money transfer. However, each country still has a somewhat different or more stringent BSA AML requirement. So that's an area that I like to see. This is sort of the global view that why can't we just have one system governing everybody's AML or BSA issues?
Yes. I'm just gonna say that and pause because I'll go on a whole rant around that, but I'm with you.
I'm raising a lot of bizarre issues, so forgive me for doing that.
No, bring them on, Iris. This is great. This is what this is what this conversation's all about. This is what VCTV does. We want to talk about these things, the things that people aren't talking about, right? You know, the word fintech people talk about all the time. Let's go a layer deeper and deeper and deeper. So thank you as well. Louis, to you, what are you seeing as the current state around just finance in general and around technology?
Well, I think Iris hit a lot of good points, and it wasn't bizarre. It actually makes you think about what could be or what should be. So I appreciate that, Iris. And next time I'll make a better introduction for myself. You know, Peter and Gary. Anyway, but fintech. You know, to me, one of the big focuses has to be security. You know, having that security deep within what's happening, because you know, when right now, if you were to go send money, you send a wire, you go to Western Union, you send money out, it's costing you a lot. And the bottom line is, when you incorporate digital into the equation, it allows you to move things quicker, cheaper, and it allows people to utilize it a little more. And you mentioned, you know, digital assets. I think that having viable digital assets in order to do this is important. You have some companies that are doing it now, and they're utilizing you know, other money transfer companies to do this, and it basically allows for a little fluidity. Okay, making things, again, if you're mobile and you're able to move money around, it's a lot, makes things a lot easier. I believe, but security is a key thing, because you want to make sure that you're secure. That when you do this, and with the banks on the back end of things, the more security that you have in the entire system, the better it is for everyone. Okay, and Iris made mention of a one universal body for your AML and everything else. It's a great idea, but the chances of it happening are is going to be something. Well, I'll let you deal with that, Kyle. You know, but again, you know, on the fintech area, for me on the back end, that security is very important. Once you have more of that in place, you're going to have more things happening, because people are going to feel more comfortable about it. You know, they don't want to be involved in something and run a transaction, then all of a sudden, you know, things can disappear. It happens, you know. So
yeah, and I mean, to that, it's security, comfort, as you've mentioned, and also that level of identity as well. And you know, there's positive and negatives to where some of these things are going and shifting towards. And there's also a lot of education, which I'm sure is about to be mentioned. So I apologize for taking it out of someone's point, but there's a lot of education that we need to do as investors, but then also that the industry needs to take on as well, helping us to get comfortable around some of these things. As Iris mentioned, there's a lot more data being used. There's been a lot of education around what and how, and maybe for the good or the bad. We're still determining where that data is going to go as well, and helping us. So absolutely great point. Adrian, to you, current state, how are you seeing things shift and shape?
I'm always looking from the marketing, sales, and business development perspective. And I saw two things emerging. First, it's about the real long-term profitability of the fintech models, because in many cases, it costs a lot to acquire a user, and the companies, especially the big ones, they don't seem to be close to profitability, or maybe not yet. And the second thing, still, people and even companies, they hold the majority of funds and transactions with the classical banks. So especially when we are talking about private persons, they use fintech cards for going abroad, for going out, but not for keeping, let's say, their funds in savings accounts and things like that. In my case, for example, I'm using Revolut, because this is an example, both for cash, both for buying stocks and for holding some funds in crypto. So I'm using all the features because I'm thinking about patterns. But still, if you saw some stats in case of fintechs, the amount of deposits, let's say, per user is like 200 or 300 euros or something like that, which is not relevant, still not relevant.
And Isabel, to you, what are you seeing as the current state of things around these industries?
Well, look, we've seen a wide range of how our colleagues in venture capital have reacted to this environment. I slowed down the uncertainty, especially in the beginning, and in the absence of data from the company's performance in a pandemic, and the absence of historical data, really. I chose to pause and observe, but that's not necessarily the case for all venture funds. But you've seen a little bit of a slowdown in some areas. So for example, corporate venture capital, that we can make a lot of co-investments with corporate VCs, and we saw a significant decline. I think the data from early 2020 was a 30%, 40% decline. So corporates have been holding back to focus, I think, on core operations and fintech solutions that play into, that really add value to the core operations versus fringe nice to haves. But of course, there are some exceptions. I mean, we've seen a few good, strong corporate venture investments. But I would say in general, the financial industry has been doing well. And JP Morgan grew 20% in the first quarter of 2020, and was now the first bank to have more than 3 billion in assets. We've seen some activities like American Express that acquired Cabbage recently. So the banks are doing well. Neobanks, Iris, you mentioned Varo. We looked at investing in Varo, but we do to business models that democratize access to finance, whether in B2C or in B2B. So we focus on B2B. And it's not just out of principle, but also because they're profitable and they grow quickly and have quick adoption rates. But we've seen a lot of inside rounds for later stage companies, and by later stage, I mean anything that's not seed, so Series A, Series B, Series C, a lot of inside rounds, investors looking to keep their portfolio companies going. Later stage is doing really well too. Stride recently raised a large Series G, 35 billion valuation. So if it's the bottom line, I would say, is if it's not a line of business that directly benefits from a pandemic, or where the clients can benefit from utilizing the solution into their core business, then there's been a little bit of a slowdown. I mean, you've seen some layoffs. SoftBank-backed companies have had historical layoffs. But on the other hand, for example, mortgage-related companies have been doing really well, benefited directly from low rates. And there are a couple of companies that I can think of that are It's still somewhat early at a Series B, C level. Better is a mortgage fintech that is doing really well, has exploded recently. Landis, a company that we looked at, backed by Sequoia. So I would say what has been the most impacted in this environment is the seed and the very early stage businesses, especially the ones that don't address the core operations for their clients. You know, when raising from individual investors, it's a bit of a challenge because you don't know how they won't necessarily react the same way that a venture fund will with, you know, a specific pool of capital to deploy. So individual investors will use their discretion in making those decisions and will react very differently. So I would say a lot of them would also rather invest in public markets that have been doing well and will pull out of investments, early stage investments in venture capital that are somewhat more uncertain. Generally speaking, there tends to be a flight to quality when there's uncertainty. But later stage, on the other hand, has benefited from strong markets. I mean, strong public markets. So we've seen record numbers of fintech IPOs, M&A transactions, record number of SPACs on the public market. That's not unique to fintech, but there are fintech companies exiting at record numbers, and some have used SPACs, and all of that.
I think the exiting at regular, you know, the exits is really what's a big piece of that. I mean, as you mentioned, we saw Amex, we see JP Morgan, we've seen several of the big banking traditional companies go after acquisitions and just pick up companies left and right. And we see a lot of technology companies that have started moving in more aggressively than ever around fintech. So we had Samsung that introduced Samsung Pay to go challenge Apple. We had Apple then move into more and more markets. Samsung then followed. We've now got Google getting bigger into that space as well. So some of these big tech companies, as we look at and refer to them as, are now pushing hard on the financial aspect of their business, right? Whether they're a mobile provider or service similar to what Lewis had mentioned, or looking to get into that, they're looking to grab that market share and not let it go, and have the balance sheets to support it as well. And Peter, to you, what are you seeing as the current state of things right now?
Thanks, Kyle. So a couple things. I think the continuing trend to disintermediation of financial services will continue in earnest and at an accelerated pace. That trend has been with us and will continue to grow exponentially. The areas with fintech, I think, that are going to be most exciting and most important. One is those that are ESG compliant. Two, ones that are leading to inclusiveness, given the current state of the economy that we're in and political situation. So I think that's going to be important. AI, which I'll let Gary speak to, is going to be a key component, and so is security, as Lewis mentioned. All those topics going forward, because the Samsung, the Apple wallets, Google getting involved, that's just going to continue to accelerate. So the security around that, the AI in terms of monitoring people's purchases and then targeting different advertisements or others to them will continue. From my point of view, look, I'm in a multi-billion-dollar family office. So am I going to invest in a fintech company? Possibly, most likely not, because the reality is that my capital is probably going to be prohibitively expensive. For the companies to make good margins, particularly the ones that are lending money or providing money, I'm talking about loans, they're going to need to be very competitive with the larger banks out there. And that's going to be difficult if my cost of capital is going to be higher for them. So the opportunities, I think, is in that disintermediation, as I mentioned, the Revoluts, the Apple Pay, Google. What I'm starting to see more and more of, and this is post-pandemic as well as pre, is more companies trying to get involved in lending to small and mid-sized businesses because the banks are pulling back. But again, they're going to need to be able to access capital to do so. They're also not going to have the AI and other risk management systems in place to monitor loans to these SME companies that, by the most part, with the economy going down over 32% on a real GDP annualized basis, and will have a pop in the third quarter, but then probably go down again in the fourth quarter. More unemployment, more bankruptcies. That's going to be hard for companies, call them fintech companies, to be in the lending business, let's say. So I think the opportunity on the technology side is for the technology platforms to continue the process of disintermediation, but not on the lending side.
And we haven't even gotten to the contactless side. I mean, we've got new Apple Watches that are supposed to come out in a few weeks. We've got more contactless payments than ever. I've mentioned this on the show earlier, that earlier in the year, Apple Pay was looked at being about 5 to 10% of all contactless payments by 2025. Then take into effect what just happened. The fact that we're all using it, that number has skyrocketed way faster than they ever anticipated. And just with that, these new devices that are coming out, back to Peter's point, those platforms are pushing these things like crazy. These trends really seem.
Go to any supermarket now. I don't know. Listen, I'm living in Wimbledon, London. I don't know how the US is, although I'm a US native. Nobody, no restaurants, no shopping centers, no cash is exchanging hand, no coins, no tokens. It's all contactless. And that's because of the post-pandemic health and wellness type of situation. So even pre-COVID, it was just a convenience to have. Now it's actually a requirement in the post-pandemic world, which will likely continue for the next several quarters as well. So I think there's a huge opportunity for contactless pay systems, and then obviously the surrounding infrastructure. That would be especially a Gary.
Absolutely, and we saw this as a trend in Asia. Asia was leading this. We saw this as a growing trend in Europe. And here in the US, we were so far behind. Technology was trying to push us there. We were so far behind. And now all of a sudden, boom, to your point, we're there, which from a financial services perspective, that's a huge growth area for us here in the United States, whereas traditionally we're so far behind on those areas. But I'll leave it at that because I want to make sure, Gary, to you, not closing, what are your current state's view of everything that's happening?
That's the first time you've ever said that, Kyle. That's early. No, it's great. I mean, so it's a dawn of a new era. So across the board with artificial intelligence, if we look at the banks, we look at the financial institutions, think about it. It's being pervasive. Cybersecurity, you're absolutely right. We've got to plug the holes. We're not doing a great job with it. We got to do a better job. I wrote an article with the former chief security officer at Apple a couple of years ago, Rick Orloff. I mean, we talked about this then. It's here today. We got to plug those holes. But the other thing, we've got to do hyper-personalization, get to know our customers better, and have that type of experience. To be able to use the data that we've got in front of us, to be able to predict who's going to default on loans, also to better be able to make decision-making processes within the banks using the data we have in front of us. So I think, this year we talk about mobile payments. You're right, Kyle. You're right, Peter, about contactless payments. I love cash, like taking cash with me. I just like it. It feels good. Couple $100 bills. I like it. But people don't want to take it now. It's strange, right? So now, or you get the hand sanitizer, you get the money. As soon as I get it, I got the hand sanitizer out. Right? So I think that, we're in the dawn of a new era. Robotic process automation. I had a conversation with one of the top executives at PwC a few weeks ago. Robotic process automation. Think about it. The opportunity to do that. My company, Eva does remote workforce management. I mean, we are in bank. I can't announce the bank yet, but we are in one of the largest banks on the planet. And I mean, they have integrated Eva in. So it is a dawn of a new era. It is, as I've said many times, AI is a new electricity, and the companies, the financial institutions that embrace it are going to win. The ones that are laggards are going to be in the outside looking in. So it is the time.
Absolutely. And Iris and Peter, I want to come to you on ESG. So everyone else, I'll be coming to you guys here in just a moment as well, if I have a few other questions. But Iris, kick us off. What is ESG for those who may not know? And then why is this an area of opportunity that people should be paying attention to as you are?
Well, I think ESG issues been with us for a long time, but recently has becoming a bigger focus simply because I think we all discuss about the cashless society, and I think US is probably the last one to catch up. I will add a little notation there. It's not because of our technology is lacking. It's really the social habits that cause us not to becoming a cashless society faster. However, as you travel around the world, everywhere else is cashless. So just a note for that. In the meantime, I think why is it ESG becoming a bigger issue? I think here we are with the pandemic issue, the electronic environment has been accelerated. But keep in mind that there are still a disadvantaged class that they may not be able to afford a mobile phone because mobile phone is not cheap. In the meantime, they may be in a rural area that they don't have access to the Wi-Fi. So you need to have all that infrastructure to enable the entire society to participate in the financial prosperity. So we still have quite a big block of that. So how do we address that issue? I think Apple's going to roll out the 5G phone in October, supposedly. We don't know for sure. But are we really thinking about the whole, say, for instance, at least in the US, are we really thinking about that? Are they investing in building the infrastructure to enable everybody to participate? In the meantime, what are we helping the disadvantaged class to also participate? And this is not only just an ESG issue, it's also a society issue that we must address, right? So one, I think the issue is we allow them the opportunity to access. We should provide a tool. How can we come up with a less expensive way to allow them to participate? In the meantime, how do we create the shared economy to enable them to participate in the prosperity formation as well? So those are the issues that we should address. In the meantime, I used a Robinhood, the trading platform. I think even though for people that cannot buy the whole share, they can participate in parts. So that's a good way to address it. In the meantime, I think Robinhood is doing very well. And as a matter of fact, the mainstream trading has to emulate their model as well. So that, as an example, should be something that we all think about.
Absolutely. And real quick, Peter, I want to come to you for just a quick thought. Anything else to add on for ESG as we're coming to the lightning round here?
So ESG, environment, social responsibility, governance. It's become sexy in recent years, but I'll tell you this: if you're a millennial, okay, and you look when you're my age, the reality is that's just going to be part of everybody's investment criteria. It's just going to be part of it. It's been part of what I've done for the last 35 years, just as a credit analyst or portfolio manager. You want to invest in companies that are environmentally protective. You don't want to go into companies that have an issue. When you look at social responsibility, again, same thing, because you don't want to have the liabilities on the balance sheet should they not be socially responsible. In corporate governance, I don't care how good the company is, if it's managed by complete idiots, okay, and they don't have proper governance, and the company falls apart. So that's the ESG side. I think there's a huge opportunity, as a lot of funds and stuff are talking about their ESG compliant. There's ESG rating systems going out there, but it should be fundamental to any investment that we take on is being compliant on all those. It doesn't have to be those particular definitions, but again, as a family office, very focused on ESG. I think in the current environment we're in, inclusiveness, diversity, the fintech space, by its very nature, okay, is a meritocracy. And therefore, the ability to cut across boundaries, race, gender, social income disparities can all be done through the fintech space.
Absolutely. And we are at the top of the hour and coming to the lightning round. So I want to make sure everyone gets in some closing thoughts and where can everyone find you. Isabel, let's start with you. Quick closing thoughts, anything else to add or areas of opportunity, and then where can everyone find you online to continue the conversation? Oh, you're on mute.
Thanks. I would say, again, generally speaking, early stage has been disproportionately affected. And I would say if you have a business at an early stage now, there is an opportunity to pivot to make sure that your solution is meaningful to your clients, not a fringe solution. And then again, as mentioned earlier, later stage overall has done well. Some have been hit harder than others. I would say keep an eye on the interesting dynamic going on with SPACs that allow late stage businesses to exit through an IPO, but quicker than going through the IPO process. You can reach me at LinkedIn. LinkedIn is the best way to reach me. And Kyle, thanks again for having me here.
Hey, thank you for joining us as well. And thank you for all the thoughts and insights. Adrian, to you, super quick thoughts, and then where can everyone find you online?
People can find me on LinkedIn, Adrian Niculescu. I believe that I'm the first there. Closing thoughts, we have to be very careful to analyze what is shifting and the habits of people and of companies. Some of the habits are changing now, and if we analyze them very well, we can pivot and we can build new things which will be in sync with the things are moving in a certain direction. So I will analyze very, very careful what is happening. Thank you very much for having me here.
Wonderful, thank you. Lewis, to you, quick closing thoughts, where can everyone find you?
My closing thoughts that this is a great panel, and I want to thank, Peter, Gary, you, everyone for their input. Iris, Isabel, I think it's important that people hear what you have to say, because artificial intelligence, machine learning, security, all these things are going to be prevalent as we move forward. Okay. And as far as where you can find me on LinkedIn, of course. You can go to our website, fjpartners.com. You can find out a little more about me. I didn't go too much into it because I was more interested on the topic. FinTech is going to be very important as we move forward. And if you're a movie buff, I'm a movie buff. So things that are created and you're able to see it on screen at some point in time, people can do it, right? They put a man on the moon, so on and so forth, and things that people are thinking about are going to come to pass. But the security aspects and that stuff is going to be very important. And I want to thank you, Kyle, for setting this up. Appreciate allowing me to be a part of this.
Hey, happy to have you, and we're super excited. Again, everyone can join us. Gary, quick closing thoughts, and where can everyone find you?
Yeah, so I've been through a lot of these times. So the startups that are out there, I started an accelerator in Russia when people said it couldn't be done. We've had thousands of companies through. They said American couldn't do it. Click Software, when the company came over from Israel, they said an Israeli company at the time would be difficult. We did an IPO on NASDAQ. Company is sold. So these are challenging times, right? Revenue is critically important. So early stage companies try to get some revenue. It makes investors feel better. This is a great opportunity for AI companies across the board. I talk about transportable models. I think that this is the greatest time by far that I've seen. I've been through electronic commerce and started one of the first consulting companies there, but this is exponentially better. So great time. You can reach me, Gary Fowler, at LinkedIn, or Gary at gsdvs.com. Stay positive, stay focused, and go get them.
Absolutely. Peter, to you, quick closing thoughts, where can everyone find you?
Sure. So again, we're on unprecedented times, probably not witnessed since the Great Depression, much worse than the GFC in 2008-9. I think it's a great time for people, particularly if you're millennials, the younger adults coming out of university, to take this time, focus on what they really want to do, how they can contribute to the world, particularly given the current political and economic state the US and the global economy are facing. I think there's a huge opportunity in the fintech space, the AI space. I have 6 kids, now 3 too young to matter. The other 3 are millennials, and I'm trying to tell them, take this time to really find where your place in this world can be. I can be found on LinkedIn as the others. I also have a website, peterplout.com. You can see me and my 6 kids and my growing family there. And I always like to put more of a social and personal connection to all these things. So feel free to reach out. Happy to go over the challenges and tribulations of my career over the last 35 years and how I can be helpful to your listeners. And Kyle, Elena, it's always a pleasure and honor to be a participant here. And I apologize if sometimes I can't make all the sessions, but again, 6 kids and work calls, but I try my best. So.
No worries. Again, we're so honored that all of you could join us, and you, Peter, as well. I mean, it's just, there's so much happening in the world and in our lives, and just to take the moment to join us, we do appreciate that as well. So thank you. Iris, close us out. Last closing thoughts, and then where can everyone find you online?
Well, I'm actually looking forward to the trend, because I think with the pandemic crisis actually has accelerated the world to be more electronically connected. So we are now having a closer network, whether we work together, socialize together. So I like to see that the crisis has created more opportunities for fintech. But my last word is that technology has been so advanced that enable all the connection, then we really need to focus a little bit more on building the business model, who is paying for the services. So with that, you can reach me very simple, iris@mighty.capital. Thank you so much for having me. I look forward to our next conversation.
Absolutely. Same here. Iris, Louis, Adrian, Peter, Gary, and Isabel, all thank you so much for joining us today and sharing your thoughts and insights. And I know today was a very packed episode and very condensed, but we will continue this topic over the course of the next few weeks to continue to talk about all the things that are happening in this space. So audience, stay tuned. Investors, again, thank you so much for your time today. To our audience, thank you for tuning in. If you'd like to be on a show like today, do reach out. We'd love to have you, whether you're an investor that wants to share your thoughts and insights, or you're an entrepreneur who'd like to pitch us and the live audience. If you like what you heard today, click subscribe, give us a thumbs up. Do reach out with any comments, feedback to Elena, to the LA Token team, and or myself. And with that being said, thank you, Gary. Thank you, Peter. With that being said, a big thank you to Elena and to the entire LA Token team for making VCTV possible every single day. I'm Kyle Ellicott, your host. We'll be back here tomorrow and all week with double episodes of VCTV to talk about everything that's happening in this third quarter, as things are so big and important right now, whether you're an investor or an entrepreneur.